Hi, everyone. Welcome back to Accounting Recounted. I'm your host, Amanda Hinder. And today we are going to cover everything you need to know about multi-member LLCs. So, whether you are just starting out or you just want to know more about your obligations as an owner of a multi-member LLC, this episode is for you. So, first things first, what exactly is a multi-member LLC? LLC stands for Limited Liability Company, and as the name suggests, it offers limited liability protection to its members. And they're basically just an LLC, but you've got two or more members, which makes it a multi-member LLC. This structure is incredibly flexible and provides a balance between the simplicity of a general partnership and the liability protection of a corporation. All multi-member LLCs need to have what's called an operating agreement in place. This is a vital document that outlines the internal governance and operational procedures of the company. This is so important with multi-member LLCs because you have more than one person involved, and this document specifically talks about the roles, rights, and responsibilities of each member, and it details how decisions will be made, how profits and losses will be distributed, and how disputes will be resolved should they arise. This agreement also typically covers procedures for adding and removing members and what happens if a member decides to leave or someone passes away. So it's very important, and it essentially provides a clear framework for managing the LLC's operations and helps prevent misunderstandings or conflicts among members should they arise. I'll be talking about an operating agreement later in the episode, so I just wanted to kind of go over that in case you don't have one yet or you don't. Now, let's move on to the key benefits of multi-member LLCs. Number one is, of course, that limited liability protection that I talked about earlier. This is one of the biggest advantages because members are not personally liable for the company's debts and liabilities. This means that your personal assets are generally protected if the business faces legal issues or financial troubles down the road. One thing that I do want to stop right here and talk about, because honestly, I feel like it's talked about enough, is personal guarantees. Okay, so while an LLC does provide limited liability protection to you, lenders often require what's called a personal guarantee when the business takes out a loan. And here's what you need to know about those. Basically, personal guarantees are legal commitments made by a member to repay the business loan if the LLC is unable to. So this means that if your business goes under, your personal assets like your house, your savings, whatever, can be used to satisfy that debt. So, of course, the lenders are asking for these personal guarantees because it helps mitigate their risk, and they kind of want that additional layer of assurance that the loan will be repaid, especially if your business doesn't have substantial assets or a long credit history. It's just important for you to understand the implications of signing that personal guarantee because while the LLC structure does offer that liability protection, personal guarantees override that protection to some extent. And so you should really consider the risks and ensure that you have a clear plan for repaying your business loans if you sign that personal guarantee. If you find yourself in a position where a personal guarantee is required, I recommend negotiating the terms or seeking legal advice just to make sure that your interests are protected. And by the way, everything that I mentioned about these personal guarantees applies to single member LLCs as well. So it's not just the multi members. A personal guarantee does override, in most cases, the LLC protection that you get from an LLC. So just be aware of that. Know that is out there, and that's what you're signing when you say, yeah, I personally guarantee that. I feel like a lot of time, maybe that LLC status kind of creates a false sense of security that you're personally protected no matter what. It's just the case if you're personally guaranteeing it. Enough about the personal guarantees. Let's move on. The next benefit is pass-through taxation. So Multi-member LLCs benefit from what's called pass-through taxation, meaning the company's profits and losses are reported on the members' individual tax returns, which helps avoid what they call double taxation that C corporations face. So, really quick, let me talk about. So, double taxation for C corporations refers to the taxation process where same income is taxed twice. So, let's say first it's taxed on the corporate level. So, a C corporation first pays corporate income tax on its profits at the corporate rate. And when they distribute these profits as dividends to shareholders, those dividends are then taxed again on the shareholder's individual tax return at their personal income tax rate. So the end result is that the same money is taxed twice, both when it's earned by the corporation and then when it's distributed to shareholders. So by forming an LLC, you're not going to have that happen to you. It's passed through. So the company is taxed, it's passed through and taxed on the individual level. That's a huge benefit. Protection, the pass-through taxation, these are all great things. Another benefit is, of course, the flexibility in management. So unlike corporations, which require a board of directors, formal meetings, etc., multi-member LLCs have flexible management structures, so you can kind of decide how you want to run the company and outline it in your operating agreement as opposed to having all this kind of structured stuff that corporations have to do. Okay, so let's move on to kind of drawbacks of multi-member LLCs because as we know, no business structure is without its drawbacks. So here are a few things to consider. Number one is kind of the complexity that you get into when you're doing business with more than one person. So, if you have disagreements among members, that can obviously create issues. And so, going back to that operating agreement, drafting that from the get-go is essential to kind of addressing these potential conflicts that could arise later on down the road. Also, you've got to think about self-employment taxes. So members of an LLC are considered self-employed, meaning that they must pay self-employment taxes on their share of the profit. So this obviously can be a significant expense, especially for high-earning LLCs. Just keep that in mind. LLCs are also regulated at the state level. So the rules and fees can really just vary wildly depending on what state you're in. So it's very important to understand your state's specific requirements when forming and operating a multi-member LLC because it's up to the state. Okay, let's kind of dive into the taxation piece of this because I know that's what scares a lot of people and we need to talk about. As I mentioned earlier, multi-member LLCs can benefit from pass-through taxation. So the LLC itself doesn't pay tax. It files Form 1065, which is an informational return with the IRS. The 1065 report reports the company's income, deductions, gains, and losses. And each member receives a Schedule K-1, which outlines their specific share of the LLC's income, deductions, and credit. So the members receive these K-1s and then they use that to file their personal tax returns. Of course, as I mentioned earlier, members have to pay self-employment taxes, which cover Social Security and Medicare. This is obviously calculated on your share of the LLC's earnings. Let's talk about quarterly estimated tax requirements for multi-member LLCs. One important aspect of taxation for multi-member LLCs is the requirement to pay quarterly estimated tax payments. So since you are running a pass-through entity, the IRS expects members to pay taxes on their share of the income earned rather than waiting until the end of the year, right? They don't want it in April. So here's what you need to know. Members who expect to owe more than $1,000 or more in taxes when their tax return is filed must make quarterly estimated tax payments. So of course, keep in mind that this includes both federal and state taxes where applicable. So again, if you're expecting to owe $1,000 or more in taxes, you have to file a quarterly estimated tax payment. So how do you calculate these? Basically, you need to estimate out your quarterly payments using Form 1040-ES, which includes a worksheet on there that will help you calculate the amount based on your expected income, deductions, credit, employment. It's important to update your estimates each quarter to reflect any changes in your income and expenses. So you kind of take a look at where your business is at and make sure that you're updating your estimates each quarter, not just paying the same every time. You need to be on track with where the business. Let's talk due dates. So the estimated tax payments are typically due on the 15th following the quarter. So April 15th, June 15th, September 15th, and January 15th of the following year. Of course, if any of these dates fall on a weekend or holiday, the due date is the next business day. So keep that in mind. One thing to also note is, of course, they're going to penalize you if you underpay. So failing to pay enough through estimated taxes can result in penalties and interest charges. So again, very crucial to stay on top of these and change them as needed to make sure you're filing enough throughout the year. Okay, and finally, let's talk about multi-member LLCs versus single-member LLCs and general partnerships. So let's talk about some of the differences there. So the primary difference between obviously multi-member LLCs and single-member LLCs is the number of members. Very straightforward, right? Single-member LLCs are owned by one person and are typically treated as what they call disregarded entities for tax purposes, meaning the IRS ignores the LLC structure and taxes the owner directly. Multi-member LLCs, on the other hand, are generally treated as partnerships for tax purposes unless they elect to be taxed as a corporation. General partnerships, the difference between multi-member LLCs and general partnerships is that they do not offer the same liability protection as LLCs. So general partnerships are basically personally liable for the business's debts and obligations, which can put their personal assets at risk. So there you have it, guys. It's kind of a comprehensive overview of multi-member LLCs. Of course, as we talked about, this structure can provide significant benefits in terms of that liability protection, tax advantages, and management flexibility, but it's important to be aware of the potential drawbacks and ensure that you have a solid operating agreement in place on the front end, right? Don't wait till problems arise, then create the operating agreement. Let's do that on the front end. If you have any questions or want to know more about these topics, please feel free to reach out to us on our website at accountablenumbers.com or on social media at accountablenumbers. Thank you again for tuning in to Accounting Recounted. Again, I'm Amanda, and I look forward to talking to you guys again next episode. Thank you.